from politics now. Let's do some business. And after the long holiday, welcome back to work. That's to you. For us, we've been here keeping you abreast of what's happening. This is Business Morning on Sunrise Daily, and I'm John Mekwa. We'll get from the global space. Oil prices rose on Friday as heightened tensions in the Middle East raised the risk of supply disruptions from the oil-producing region. The prices are set for weekly losses amid expectations of fewer U.S. interest rate cuts this year. That's our inflation number. It really did change some perspective. But let's look at the numbers right here. And we see that even though oil, Brent, was down 0.57%, it's still above $90. It's $90.25 for a barrel for Brent. WTI also has tapered a bit, but it's still looking good at $85.63, and that's down 0.72%. And now, this, well, not good news have brought this, because we see that the gains erase some losses from previous session, which was dominated by worries about the stubborn U.S. inflation that dampened hopes for an interest rate cut in June. We don't know if that's still going to hold. Also, suspected Israeli warplanes bombed Iran's embassy in Damascus in a strike for which Iran has vowed revenge, racketing up tensions in a region already strained by the Gaza war. Israel has not said it was responsible, but Iran's supreme leader has said that Israel must be punished, and it shall be for the attack. So we see a lot of tension right there. The U.S. expects an attack by Iran against Israel, but one that would not be big enough to draw Washington into war. This is according to a U.S. official and some Iranian sources. They also said that Tehran has signaled a response aimed at avoiding major escalation. Meanwhile, on Israel's part, they're keeping up the war in Gaza, but they're also preparing for scenarios in other areas. According to Prime Minister Benjamin Netanyahu, he revealed this. So a lot of tension going on there, and then we see it drilling down to this. We see more price increase for Brent and WTI. And still talking about the oil space, Nigeria's crude oil production has recorded its second consecutive drop this year from 1.32 million barrels per day in February to 1.23 in March. And that's according to OPEC's latest monthly oil market report. The 92,000 barrels per day decline recorded in March brings the total loss for the 2 months to about 196,000 barrels every day. And then, you know, this is when Nigeria should be just jumping on. I mean, the unfortunate circumstances, but you have the price this high. Brent is what Nigeria does. So imagine if we're doing this 90 compared to about 77 that we have on our budget, or in our budget. The gains that Nigeria would have recorded at this time now is being eroded. Well, looking at the chart for Africa's top oil producers within OPEC, Libya narrowly overtakes Nigeria now with about 1.24 million barrels per day produced in March. Meanwhile, Nigeria's oil rig count rose by another 3 in March, climbing to 19 from February, which was 16. Well, not so far away from oil now, but still in Nigeria, the chairman of Boy Group, Mr. Samad Rabiu, has commended the steps being taken by the federal government, even as he advises Nigerians to be patient as reforms take time. The businessman was speaking after he paid a visit to President Tinubu in Lagos. Also speaking at a separate meeting with the president is the group CEO of Nigerian National Petroleum Corporation Limited, Mr. Mele Kyari, said that significant improvement has occurred in the country's petroleum market.
We all need to come together and support the government, support their policies. You know, the government means well, you know, clearly, and they are trying to support Nigeria, but we need to be patient. You know, these reforms take time, without a doubt. It's not easy. It's not something that can be done in one day. So we are working together with the government, especially now that the president has, you know, established, you know, this committee, you know, between the government and the private sector. So we're working together. We are supporting each other. We're advising the government, and the government is listening. That is very, very important. The fact that the government is listening, you know, means so much, you know, to the private sector. And I think we'll get to the desired land.
It's also a perfect opportunity to reassure Mr. President that his focus on delivering gas into our markets, both domestic and international market, bringing back prosperity to our country, is right on course, and this is a task that will be delivered, and very many obvious things will unfold in the coming weeks. It is very clear that majority of our exports from this country is petroleum as at today that can earn foreign currency. There's significant improvement in the markets in terms of pricing, and also we're able to establish some level of stability in our project. The combination of this is bringing additional resources available to our country. And of course, more than anything, there are clear monetary and fiscal policies that the president and this government has put in place that is working, and that is bringing about all the changes that you are seeing in the currency market.
Yeah, so moving on now, one of those reforms or the applaud that the federal government is getting at this time, or at least this administration, is that clearance of backlog, FX backlog, especially the aviation sector. Now let's find out if the impact has trickled down now to everyday airfares. And we're speaking with the president of the National Association of Nigeria Travel Agencies, Mrs. Susan Aporeye. She joins us from our Abuja studio. Good morning, Susan. Thank you so much for your time this morning.
Good morning. Good morning. Good to be here.
Good to have you here. So, a lot of things have been happening in the airfare space, especially since Airpeace started that London route. And we had Mr. Oyema on our political show earlier in the week, and he did reveal some things. But first of all, do tell us, has anything changed since the clearance of the fare of the FX backlog by the CBN? Have we seen the impact, or are things still as it was?
Thank you very much. I want to say a very big thank you, first of all, to the Minister of Aviation, Festus Keyamo. I say Migwasa for standing by Airpeace through and through and making sure this comes to a reality. Airpeace have been on this journey, from what I understand, for like over 7 years now. And I say Migwasa to our minister for finally making a dream come true for Dr. Allen Oyema and the entire Airpeace team and the entire travel industry as well, and Nigeria. Now, when it comes to the price, I will take you a bit back. I will try to summarize as much as I can. Back history a bit. The issue of pricing for us in airfares in Nigeria has been a problem for a very long time in terms of the fact that fares in Nigeria are usually higher than our neighboring African countries and all that. So the fight for this fares to drop has been a long time coming. I mean, 2 administrations before me have been on this issue. But gratefully, and this is where I also say kudos to our minister, is listening. He has a listening ear. He has an open heart. I remember the very first stakeholders meeting he had, and we expressed our issues, and he committed to addressing them one after the other. You know, it's not just enough to be attacking government. When they are doing well, we should also praise them. So thank you to the administration of Tinubu and our dear minister too as well. There was a clarion call by the regulator and all the agencies involved, which included NANTA, to look into this issue. I'm going to talk about it from 2 perspectives for us to understand. Before all this traffic fund issue started, let's not remember that there's a major role that rate of exchange also play in the fare structure as a whole, because fares are priced in dollars, then whatever rate of exchange the naira is selling is what determines what the amount will be in naira. I mean, before all this started, we were selling at the rate of 300, 400. I can't even remember again, because the rate has jumped so high that I've lost track. At that time, we had fares going for 400, 600,000 naira, depending on the destination. And the traffic fund issue came on board. And what happened then was the airlines restricted the lower inventories, although not all of them. Some of them remained, still left their lower inventories. But the airline closed up all the lower fares and only left the high fares. So that was why we now started seeing fares for 2.5 million and 3.5 million. And at that time, rate of exchange was fluctuating between 350 and 450. And guess what? The rate started going up. 600, 700, 800, 900. At the time it was getting there, the same fare of 3.5 went as high as 6 million. And guess what? The rates kept going up, 1,000, 1.1, 1,002, until it got to 1,800 and something. And at that time, the same fare that was selling for 3.5 went up to like 7 million because of the rate of exchange. And remember, these are only the highest fares on the system. The lower ones were not released. Then, thank you to our minister. He deliberated the regulator to begin to mandate the airlines to release lower inventory. And I can tell you, the regulator, NCAA, and every other agencies involved, including NANTA, we had an intense section with all the airlines one after the other. And the two major purpose for that engagement was, one, for the airlines to release inventories. After all, the rate of exchange is selling as much as the same thing with black market. There's no difference. So one was for them to release inventory with immediate effect. Two was for them to look at reducing their fares. Those were the two mandates of that committee in which I was part of. And it was an extensive, intense sections that we had with the airlines. Remember, not all closed inventory. So the ones that closed inventory, some of them 48 hours they released. Some of them 1 week, asked for 1 week. Some of them asked for 2 weeks. So they now released all the lower fares. And once all the lower fares was released, even at the same rate of 1,800, I mean, instead of 7 million, which was the highest fare, we were now getting like 2.53 million because the lower ones has been released. Now, this is where it gets interesting. Then, thank you to whatever the current administration, Tinubu, is doing. They are definitely doing something in the right direction. And the rates begin to come down from 1,008 to 17, 16, 15, 14. Now we are at 12. Now, $1,000, hypothetically, of a ticket when the rate of exchange was 1,800. Let's do the math. That's 1.8 million naira. Now the rate of exchange is 1,200. That same $1,000 is 1.2 million. So already the naira gaining strength against the dollar has already brought about a massive reduction already because tickets are priced in that. Now, Airfares came on board. Kudos. Thank you very much, Dr. Oyema, because this wasn't an easy journey for you. And we appreciate you. We love you. I'm sure he knows, because on the maiden flight, myself and my team, we were there. Nanta was fully represented. As a matter of fact, we gave Airfares this slogan, Airfares our own. We are 100% behind you. And Airfares started. When they started, they said, remember, I want to remind you, the two mandates that the government, through the regulator, gave the airlines was, one, release with immediate effect of lower inventories. That automatically brought the economy class that was selling for 7 million, 8 million to like 2.5 and 3 million just by releasing the lower inventories. And then rate of exchange. Kudos to the policies that is being put in place by President Tinubu. The rate of exchange started coming down. So the 2.5 fare that was there at when the rate was 1,800. That same 2.5 fare is now selling for 1.2, 1.1. So that is what we are seeing. That's the immediate reduction that we are seeing. I want to also mention here that the regulator also demanded that the airlines to reduce their fare. And if there is reduction in fare that we are experiencing now, one, yes, definitely, the coming of Airfares has a major part to play in that. We all know, my darling, that competition does what? Drives prices down. So with the coming of Airfares now, gingered the airlines, probably, for them to now begin to take the mandate of the regulator more seriously, which is for them to look into the fares that they give to us in Nigeria. Because we all know, and it did not start now. And you see, it's a double-edged sword, if I may use the word. The fact that they are obeying the instruction of the regulator, because the regulator mandated them to do that, or risk the fear of being sanctioned. Now, rate of exchange has helped us, And of course, maybe the instruction from the regulator is also what has contributed. And definitely the coming of our own airpiece also must have also pushed the airlines to actually begin to reduce their fares. Just wanted to give that history a bit.
Well, you are so excited, Susan. I don't blame you. I'm sure a lot of Nigerians are also feeling it and, very excited too. But how do we keep it? Now we've dealt with the trapped funds, so the foreign airlines can no longer threaten us. And we see the Naira gaining, obviously, which, as you have noted, is also showing. How do we keep things on the good side? I don't think we're happy with Naira at 1-2. I am rooting for 700. I know that the economists, looking at the numbers, say it's be about 980. I'm looking for 700. But how do we keep things going in the right direction? How do we avoid, especially this issue of trapped funds again, so we don't have the foreign airlines on our throats?
Thank you very much. Thank you very much. The way that can be resolved is putting the right policies in place, which President Tinubu has already started doing. If he continues with these policies that they are putting in place and it doesn't get distorted and more policies are being put in place. The issue we have in Nigeria, because we're a consuming nation, there's a lot of expenditure in dollars. And mind you, we do not print, it's not our currency. We don't trade in dollars. So the demand for it was high. If the current administration continues in this right step that they are already putting in place and make sure that Nigeria as a whole, our economy is not dependent on dollar. We find a way in which we can, the demand for dollar is reduced drastically in our economy. Then we are already heading to a point in which we will never have issues with these trap funds. And then again, they should also encourage more of Nigerian carriers as well, because they are not going to have issues with trap fund like our very own airpiece. As many Nigerian carriers that has the muscle, that has the availability, please, from what our minister told us and made clear to us, that they are willing to support more to come on board. That is our own way of making sure we depend less on this foreign currency that is not our own. Policies is what will make sure we do not find ourselves in this situation of trap funds ever again. If you remember, this is the third time we're having issues with trap funds. It's just that the other two times have not been this bad. This was the worst of it. Or that it went as close to almost $2,000, $1,900 and something dollars that was selling at the airline. So let them just continue in this policy, bring in new policies, let the economy of Nigeria be more of homegrown, patronize our own. I was talking to somebody and we were just talking, how do we make sure EP stands strong in the industry? We are supporting them. For instance, they can come up with a policy that every government official should travel EPIs except the destination that EPIs does not go to. If it's a destination that EPIs go to, they can come up with a policy that all travels by government officials should be EPIs. That is our own way of patronizing our own. I was talking to, even the same thing goes to the medical sector. I mean, the medical sector also is in shambles. So if those policies can come on board, look, let us patronize our own made in Nigerian product. No more, just to reduce the demand. And thankfully, I also heard that the dollar is still going to, the Naira is still going to gain more strength because the Dangote refinery and the policy to have modular refineries in different regions as well will make the oil importers and exporters to begin to buy this product in Naira and not in dollar. And I know that sector is the highest demand for USD. Their own demand for USD is much more than the aviation sector. But if that highest sector, which is the oil, petroleum sector, can begin to buy this product homegrown and in Naira and export and sell in dollars, you see, we are now strengthening our Naira against the dollar. And we continue at that pace. My darling, I don't see us falling back to these trap fund issues again. Thank you.
All right. Well, I tell you, Susan, I can feel your energy, and I totally, I'm in line with you. Thank you so much for your time and for your passion for not just your sector, but I mean the Naira and Nigeria as a whole. President of National Association of Nigeria Travel Agencies, that's NANTA, Mrs. Susan Akporaye.
Thank you very much for having me. Enjoy the rest of your day.
You too. All right, let's take a break now. We'll be back with another conversation. Just stay with us. Welcome back to Watching Business Morning on Sunrise Daily. Now let's talk about the ports. I mean, Susan was just talking about how if we increase our production and our export, we can boost the value of the Naira even more. But when you talk to exporters, they tell you one of the challenges they face is at the port. How do they get their goods out, in good condition and in good time? We're speaking to the Managing Director of Dry Ports in Dala Dry Port in Kano, Mr. Ahmad Rabiu joins us virtually from Kano. Thank you so much, Mr. Rabiu, for your time. Good morning. Mr. Rabiu, can you hear me? I wonder what's happening with Mr. Rabiu. I cannot hear him. I wonder if he can hear me. But it's about a year since the Dala Dry Port started operations in Kano, and the promise of that was to reduce the cost of moving export containers, especially within the country from the northwest to other parts of not just Nigeria, but the world. And they also promised to bring technology into the operations and reduce the price by as much as 25%, ease of doing business, and creating a one-stop shop for ports or port activities is also one of those, especially connecting the ports in the northern part to Lagos, where we know most of the activities are, and they also depend a whole lot on the rail line. The rail line we've seen from the past administration to the current one are giving attention to rail projects, to see how they can connect the country. Now, of course, we have the road, the one from Calabar to Lagos, raising a whole lot of dust. But I mean, in this case now, I think yesterday or 2 days ago, we did speak to one of our guests about the issues around the port, the infrastructure around the port, and then the number of agencies. Even though we've been told that that is being reduced, that the number of agencies and the demands and the paperwork perhaps is being merged into a point, working towards that issue of a one-stop shop for those port authorities, but it would have been nice to have this managing director of Dala Port tell us what's going on, if they have been able to get some of that. While we wait for him, hopefully we'll get him before the program comes to an end. Let's shift a bit to the market. The markets have been closed since Tuesday, and we saw at the NGX that it's been green. It closed in the red, I beg your pardon, and we see that bearish sentiment still going on there. But in the fixed income market, the Debt Management Office has said that it plans to raise 450 billion naira in its upcoming bond auction on April the 15th. That's on Monday, so you want to get set for that. The target is part of the DMO's broader strategy to generate up to 1.8 trillion naira through federal government bonds in the second quarter of this year. We've already started that second quarter. The auction will offer 150 billion naira for each of the following bonds. The newly issued federal government April 2029 5-year bond, remember that's new, has just been introduced in the second quarter. And then the reopened 2031 7-year bond, and then the 2034 10-year bond. In the first quarter of this year, the DMO raised 2.39 trillion naira through federal government bonds, with the largest issuance recorded in February. So yes, if you are an investor, this may be an opportunity you have been waiting for, to get paid by the government, borrow the government some money. So you invest in bonds, you're borrowing the government money. And we see the yields doing well, hitting 20% and more. even though, when you compare to the inflation rate, some investors say, well, it would be nice if it's up to the, but that's a lot of debt servicing for the federal government. So let's show a little bit of mercy. But this is another opportunity if you want to invest in the federal government and you want the federal government to owe you, if it's a year or 5 years or 7 years, that would be this an opportunity for you. It opens on Monday, the 15th of April. So unfortunately, it doesn't look like we can get the managing director of Dry Port, Dala Dry Port. Perhaps we'll try to get him for the 1 o'clock program. That's Business Incorporated. So do tune in. We'll try to fix him. I hope by then this network issue will be resolved. He's in Kano, so I guess give him a little bit of excuse. But, well, that's it for on this side of Sunrise Daily. It's Business Morning on Sunrise Daily. We'll go back now to the Sunrise Daily studio to continue with the program.